Joining us now, Jan Kniffen, J. Rogers Kniffen, Worldwide CEO, CNBC contributor. We were just looking through Williams-Sonoma in what looks to be a pretty strong quarter. I guess, you know, the stock had run about 31% over the last 3 months. What's the story here?
It was pretty much a fabulous quarter, and West Elm, which is what we expected to do all the heavy lifting, was fabulous. So it was even better than anybody expected. They raised their guidance for the year. It's hard to find something wrong here other than the stocks run up. So yes, they had a great number. They looked forward and they said things are going to be fine. We're seeing the kind of growth we expected. We're raising our guidance. I thought it was a great report. So I thought 3 out of the 4 of those you just mentioned would be up in the after hours.
Well, let's talk about the one that is up, which, as Sarah mentioned, was Guess. Legitimately up in your eyes?
Well, they were pretty bad in North America, and they were great every place else. And I didn't think they would be nearly as good internationally as they turned out to be. So I'm sure when the street looked at that, they said, oh, these guys look like maybe they're getting it right again. And if they do, can they bring that back to the States? So, yeah, it was surprisingly strong. I was clearly wrong. I thought they'd be weaker than what they reported.
Jan, overall, you know, the argument from economists and from strategists and from traders lately, at least the optimistic one, seems to be the U.S. consumer is in great shape. We're getting that out of all the economic data. We're getting that out of the earnings report. Do you agree, after digging through and listening to all the conference calls, with that assertion?
Well, you have to admit, discounting was great, right? Walmart and Target were really good. Do-it-yourself was great. Lowe's and Home Depot were really good. If you looked at off-price, they were pretty darn good. TJX wasn't quite as strong as we thought, but the category was really strong. Online was great. There was nothing wrong with anything we got out of Amazon or anybody else's online report. The only things that looked tough were full-price, on-mall kind of retailers. Everybody else has looked very strong. And look at these guys today. They all turned in good numbers. So, yes, I think the consumer's really, really healthy. And I think it's very simple. They've all got a job. They're working in record numbers. Their wages are going up about 3.5% now for non-supervisory personnel. The consumer has nothing to complain about. They're not watching the yield curve. They're not watching the tariffs. They're watching their own lives, and their business is good at home.
Would you be recommending Williams-Sonoma on this pullback despite a strong quarter?
Oh, I'm a big fan of Williams-Sonoma. Either way, I would have been all about owning the Williams-Sonoma stock because they're doing all the right things and their cross-marketing's working and they're doing all the right things with West Elm. And even though it's a tough competitive space, they do a huge amount of business online now and they make about as much on an online sale as an offline sale. So, yes, I think they're one of the winners. And I think, like I feel about Costco or Walmart, you should own Williams-Sonoma.
I mean, quickly, Jan, you said the consumer's not watching the tariffs, but the retail executives are watching the tariffs. And today we got confirmation from the U.S. trade rep that they're set to go into effect in September and in December, the remaining Chinese imports, which include apparel and footwear and all of a lot of the products that are made in China that are sold at these stores. So in your view, who's most exposed? Who do you avoid?
Well, that's what PVH just said to us, right? We had this great quarter, but we're looking forward and we're going to be more cautious. So you're going to get that out of a lot of retailers and people who still have exposure. If you're a footwear guy, you've got a lot of exposure. If you're Five Below, for instance, half of your business is still coming out of China. You have to worry about those retailers. On the other hand, yeah, right now they're telling us the tariffs are going to happen in September and they're going to happen in December, but we really never know exactly what's going to happen. And we also don't know how the plants are going to react and how the exchange rate's going to react. So a lot of this gets absorbed by the plant that doesn't want to lose the production. It gets absorbed in the exchange rate. Right now we're seeing, you know, cotton prices are half of what they were last year, and even shipping costs are down. So something gets absorbed in the supply chain, and then the rest is getting absorbed at the retailer because almost nothing is getting passed through so far to the customer. And it's going to be hard to pass through going forward. So that's why we're worried about the earnings. We don't know how much can get absorbed in the system before it gets to the retailer.
Yeah, PVH lowering guidance both on revenues and earnings. Jan, thank you. Good to check in with you. Jan Kniffen.